Welcome back to the Dividend Diplomats YouTube channel. You guys, you are riding right now with Bert and Lanny, the Dividend Diplomats. We are proudly bringing to you all the dividend stocks that we can right now, Bert.
Yeah, and that's what's fun. This market is presenting an insane amount of undervalued dividend stocks to buy. It's time like this where people are running to the sidelines, running to the stands, getting out of the stadium. You know what we're doing, Lanny? We're pushing them out of the way. We're shoving them out. We're saying, get the heck out of our way. We're going onto the field. We're playing. We're putting that cash to work.
We are the men in the arena right now, guys, and we love dividend investing because we are adding to our passive income total by buying shares in high-quality companies or ETFs on that journey to financial freedom. Guys, there's no question, right, Bert? We are in a recession, inflation, all-time highs, Fed raising rates faster than Nick Chubb can run from end zone to end zone right now. Things are happening fast. Housing is coming down. The economy is definitely in a holding pattern right now.
Every couple of weeks, something new seems to come about that just changes the game, changes the spectrum, and changes the forecast altogether. That's why you have to ignore the noise. You have to buy great companies that have grown their dividend through good times and bad times. And that's the key. And that's the pillar for our dividend investing strategy.
So a few things came up. FedEx. I know this is not a FedEx video. They released a very terrible outlook about the remainder of the year, pretty much saying we're removing it. We can't think of 2023. It's just bad all around, right?
Yeah, guidance, forget about it. You're out the door. We have no idea. Recession's coming, people returning stuff, canceling sales order. Who knows? But when that happens, you know what else happens to companies in the same sector, Lanny? It's probably a canary in the coal mine for that sector, that news about them and their forecasts are probably going to be impacted and released soon, which is the featured company we're going to talk about in this video as a result. And who would that be, Lanny?
Well, we are talking about United Parcel Services, UPS, ticker symbol UPS. And guys, we all know retail right now is also going through some trials and tribulation right now because they're holding a lot of inventory as well. This holiday season, they're saying it might not be as great as other holiday seasons.
Yeah, which is insane because we remember last year, the last few years, just how much those brown UPS trucks were flying through your neighborhood, just how many packages they were delivering. So it's interesting to see how the forecasts are already making their way through analyst expectations and the stock price. I mean, when you look at the financials for UPS, Laney, when you look at those first 6 months before these warning signs really started to happen, some of the metrics were looking awesome. I mean, through 6 months, revenue was up 6% to not 1 billion, not 2 billion, not 3 billion, but $49 billion. So this isn't small change here. This is a massive amount of cash that UPS is bringing in.
Yeah, they are earning a lot of revenue. They were able to increase the amount of shipping charges to help offset costs, such as the higher fuel costs through the war with Russia, Ukraine. Obviously, labor costs are increasing. Other, parts and other pieces to UPS's business are increasing because of inflation. But they were able to offset a lot of those increases early on by increasing their price. They also dealt with lockdowns in China, obviously, because they were still going through a lot of COVID scares. That reduced the volume that UPS was shipping out. So still being able to generate through 6 months, 49 billion, it's not too bad.
No, it's not too bad. And one thing that always also jumps out when you move off the income statement and you travel, you hop in the truck, drive down the street, and you're like, hey, let's go look at the balance sheets house here. Let's see what's going on there. I had to filter myself there for a second. They had a boatload of cash on their balance sheet. They have $11.7 billion of cash. And then, you know what? Let's look at their current ratio just to see how strong and how liquid the company is. Current assets divided by current liabilities equals your current ratio. If it's above 1, that means your short-term assets, your current assets cover your current liabilities, your bills due over the next 12 months. That's why we like to see 1 times. And Lanny, what is UPS's current ratio?
The current ratio is 1.47. So clearly liquid, clearly able to cover current obligations. Here's the funny piece too. UPS stock is down 21% this year. UPS stock is also down 18% in the last month. So 21% since January, but 18% of that is in the last month.
It's a funny looking stock chart for 2022. That is for certain. But with the performance being so poor for the last month or so, that's why it's popping up on the radar here. And that's why we're here talking about it today, because there may be signs of undervaluation for UPS that will cause us to buy some shares, and maybe possibly some of you to buy some shares if your research after this video takes you to UPS land. How are we going to evaluate UPS, Lanny, for the rest of this video?
We're going to use the DD stock screener, focus on the price to earnings ratio, dividend payout ratio, and dividend growth. Last but not least, we'll also look at the dividend yield to see how much money this stock will pay you. Now, UPS was trading at $167.86 at the close on September 22nd, the night that we are filming this. Analyst expectations from Yahoo Finance was $12.87. So that first metric, that price to earnings metric, to really see if they are undervalued. The PE ratio is 13 times earnings, so fairly low for UPS.
Phenomenal. Let's look at that second metric, the payout ratio. Their current dividend is $6.08. Divide that by the 12.87. That is a so perfect payout ratio of 47.24%, which also means if earnings continue to slide for UPS, the denominator in the payout ratio just keeps coming down. You know what? There's still plenty of room to continue growing and maintaining that dividend. Plenty of safety right there. That's why we look at the payout ratio.
Dividends and dividends and dividends with UPS right now, guys. They have grown their dividend for 12 plus years at an average rate of 6.41%. We all know they had a massive increase this year. I think it was what, 49% or something like that.
Yes, it was very good. Very good.
Don't expect that going forward, but again, increase their dividend for 12 plus years.
Yeah. And lastly, that yield, that dividend yield is 3.62% for UPS after that price continues to tumble.
So definitely getting paid a premium to own UPS stock, 2 times the S&P 500, at least, higher than the S&P 500. Again, down 21% this year. There are 145 billion by market capitalization, which is the number of shares times the stock price. That's your market cap. So 145 billion, one of the largest in the world here we're talking. So Bert, in summary though, we have a 13 PE ratio, a 47% payout ratio, dividend growth of over 6% with the dividend yield of 3.6%. What's your hot take on this stock, Bert?
I mean, I think it's delivering a spot. I couldn't finish off the pun there. All right, I'm just going to cut to the chase. I'm probably going to put UPS on my watch list. That's where I'm going. It's a little late. Puns aren't flying the way they were earlier in the day. So metrics are great. It's a great call out to look at UPS. I know FedEx caught the attention, but UPS with such a strong yield and other great metrics too deserves a spot on your watch list to consider. What are you thinking?
Thinking I'm going to keep watching this stock. If it breaks below 165, 160, I'll probably start nibbling another share, guys. But what is your take, community? Are you buying UPS stock? Is this a stock to buy right now during this recession? Are you staying away from buying stocks? Are you keeping it safe by buying ETFs? Let us know in the comments below.
If you haven't already, subscribe to the channel. Give us a thumbs up, everybody. Let's go. Let's keep finding other great stocks and growing that passive income.
That was Bertha Hurt and Lanny from the Dividend Diplomats, over and out.